Morning all, welcome to the Cash Management Solutions webinar. We're hoping to run through a few different apps today that we've got for Chaser and Fidelity, but then also what we're going to firstly talk about is cash management and why it's important for business and how you can manage your cash flow in the best possible way. Just to kick off a little bit about us, as I appreciate there's going to be people watching this who are current clients of Raffingers, but they're not necessarily also clients of Raffingers. So a bit about us, we're a medium-sized accountancy practice. We have two offices, both in Essex and London. And our key strength that we always pride ourselves on is that we specialise in a wide variety of different services to a number of different sectors. And so if I move on to the next slide, what you'll see here, as I mentioned in the previous slide, is that we offer a number of different services. Now, I'm not specifically going to go down the list of all the different things that we do, but what you can see from this slide is we do the bread and butter, basically the accounts, the tax, basically we can do all that. At the same time, what we also offer and where we feel we differ from other accountancy practices is the value-added services. And this is an arm of our business that has been really growing over the last couple of years. So for example, profit improvement with cloud technology. An example of this will be the two different apps that we look at today. So with Chaser and Fidelity Payment. And what these do essentially is help businesses understand what they can do to grow their business, but also better manage their business. And as accountants, we can really help them with this and provide them with that value-added service. We look at system improvement reviews, business improvement reviews. So after we've done the accounts and the tax returns, we really help understand the client's business inside in terms of what systems and processes they have in place, what they can do to improve these by changing these and ensuring that they can save money in certain areas, but also improve and become more efficient. So as you can see, we're not necessarily just accountants, we're seen as business advisors, and that's the way we like to see ourselves. We do the bread and butter in terms of the accounts and the tax, but then we can also help our clients grow their businesses and improve their businesses going forward. Now, to kick off the webinar, I appreciate you might not necessarily know enough about us, so I'm just going to pass it over to Jebtha, who's going to give a bit of background about himself.
Hello everyone, thank you for joining us on this glorious morning in London for our webinar. My name is Jebtha, and I'm one of the associate partners here at Raffingers, and I look after the small and medium-sized businesses within the firm. And I speak to small and medium-sized businesses every day, and I'd like to think I know a little bit about the struggles that you go through as business owners when it comes to cash flow. And this is the reason why we're hosting this webinar, to help you improve your cash flow and the tips that we can give you to make your cash flow better.
And very much so myself, just like Jebtha, basically I advise small to medium-sized companies. Again, the key challenges we always get from clients is, how much is my corporation tax bill? That's just a cash flow issue all the time, and we always get asked. And so a lot of the key challenges we do get from clients is always around cash flow. And both of us really feel that from our experience of dealing with small to medium-sized businesses, we understand the cash flow problems that owner-managed businesses all the way up to large corporates have, and we essentially, as accountants, help them through this process. So like Jebtha said, we're really involved in, I suppose, the coalface of it all with our clients to understand what the cash flow management issues are. Now, before we get into the different apps and what we can do to help and what we can do to help you with your cash flow management, what I want to do is, just before we kick off on everything, is if you look on the actual screen that you're watching this webinar on, you can submit questions to us as the webinar progresses. So as you can see on the screen here, if you type your question into the box below and then submit this to us, what we will do at the end is we have a bit of time to run through some questions that you may have, and we can just go through different challenges that you guys are facing out there and really make this more interactive than it currently is. So what's important here is understanding why to have a good cash flow. Now, a lot of businesses, a lot of clients say to us, yes, I'd love to have a good cash flow. I want to have a constant cash flow. But why is it important for a business to have a good cash flow? Well, the first point to look at is stability. Having a good cash flow gives you a stable business environment. And we think that's important because it reflects very much on the business itself. So, for example, if you pay your suppliers on time, your suppliers are going to think, oh, hold on, this client of ours has a great reputation. They always pay us on time. And so it might offer you more favourable terms going forward. So it improves your reputation. But then also with stability, it gives you a chance to really look at other areas of the business that you can improve on. When you've got a constant cash flow, you can understand your business more in depth, and you can understand what's going on in your business rather than worrying about, oh, I haven't received payment from this customer and I've got to pay this supplier, and you're not necessarily constantly worrying about where the money's going to come in next.
And so the second point is flexibility that a good cash flow gives you. We can have the perfect cash flow forecast looking at when my customers are going to pay me and when I can pay the suppliers, but there are always unexpected events that happen, issues that crop up, payments that need to be made urgently, and this throws the cash flow out of kilter. So good cash flow gives us that flexibility to respond to emerging dilemmas or decisions that need to be made in the long-term interest of the business, and that can be made at any point in time without having to worry about the cash flow. Sometimes an opportunity for the business may come up, a good purchase or a good machinery that needs to be purchased, but without good cash flow, it's difficult to make those decisions. So having that cash flow gives us that flexibility as a business owner to make those decisions.
And those 2 points that myself and Jebtha spoke about, stability and flexibility, will really flow on to the next point in terms of growth. Now, firstly, as a business, if you've got a good cash flow, it gives you great stability, and in terms of maintaining good cash flow to pay your suppliers, to have a good reputation with your customers and your suppliers, but then at the same time, like Jebtha mentioned, it gives you that flexibility so you can respond to emergency situations. At the same time, with that extra cash, with that flexibility, you can then grow your business. So you can invest in your infrastructure, invest in training your staff or different types of assets that can really improve your business. So really important to understand that having a good cash flow gives you those top 3 points in conjunction with each other. So you get the stability of having a good cash flow, you get the flexibility of using that cash to invest in your business, and when you invest in your business, it gives you that growth going forward. So they all really go hand in hand.
Yeah, and the fourth point is a reduced cost. And what are we talking about here? This is the bank overdraft fees, the bank overdraft charges, personal credit card interest, business credit card interest. It may seem small amounts, immaterial amounts on a monthly basis, but I'm often surprised at clients' reactions when we give them the annual accounts and show them what the finance cost of their business has been. And people don't look at it in terms of the big picture and the annual cost, but the minor amounts. And these costs do affect the bottom line. It can make sometimes £1,000, £2,000 difference to your net profit. So as a small business, these costs matter, and you really need to look at how the costs can be reduced.
And following on from reducing your costs, what's interesting is it's surprising to us both, where especially with a lot of smaller businesses and those in their early growth cycle, those startups, essentially where we see a lot of personal funding into the company. So for example, you're using personal credit cards, personal loans or overdrafts, or even your own cash reserves personally. And especially with the financing through overdrafts and credit cards personally, people don't necessarily appreciate the cost that comes with that. And that sometimes isn't picked up as a business expense. And so it's important to understand that sometimes you might be using your personal credit card or your personal overdraft to finance a business, and that's a hidden cost to the business going forward. So it's important to really clarify and understand that. But moving on from that point is liquidity. And liquidity really flows well from our first 3 points in terms of stability, flexibility, and growth. If you have good cash flow, it gives you good liquidity in a business. You know, essentially cash is the most liquid asset out there, and essentially it gives you that flexibility to pay your suppliers on time, to invest in your business. It just gives you that extra cash in your business to, you know, save it for a rainy day, also invest in your business to grow forward. And it's always important to have good liquidity, because essentially that leads to a good credit rating. And for a business, it's always important to have a good credit rating to improve the business's profile going forward if you want to expand and grow.
And the final point is the working capital cycle. And this is an interesting point. Some people want to have 3 months of float in terms of expenses that they want to have if no income is received into the company. Some businesses say 6 months. They want to have 6 months float in the bank for the business. And some people laugh at the suggestion of 3 or 6 months because they just can't afford to have that float. I don't know what works for your business, but something for you to think about. How much float do I have in my business for working capital? Can it last me 3 to 6 months? It's something important for the business, something that you really need to be thinking about. And just on the point that Mehul touched on earlier, having that working capital will ensure that you have a good reputation in terms of credit rating and the reputation with the suppliers in terms of when you pay their invoices. the more prompt you are with your payments to suppliers, the better reputation, the better credit rating you will have. And this will mean that you'll be able to buy more things on credit. So something for you to keep an eye on in your business. How good is my working capital cycle, and what is my reputation with my suppliers in terms of making payments on time?
And just following on from that working capital cycle, a lot of the time what we do for our clients is we do stress testing. So a lot of clients don't necessarily understand what their working capital cycle should be. Should it be 3 months or should it be 6 months? And what we do essentially is we work on 2 different extremes. We work on one extreme where we say, what would happen if every single customer never paid you? And how long can you continue to pay your suppliers? How long can you continue to pay your staff? And so that's one extreme. And then we have the other extreme of saying, okay, if every customer paid on time, how would your working capital cycle look? And what we try to do is work on these stress testing scenarios to understand where should we be in the middle in terms of where our working capital cycle should be in terms of how much cash should we have in the business going forward to ensure that we can make our payments if, in the worst case scenario, we weren't to receive any money into the business. So it's important to do that sort of analysis yourself and understand your own personal working capital cycle for your business. So now moving forward, now you understand why it's important to have a bit of cash flow. What we want to move on to is how you can actually manage that cash flow. So later on, we'll talk about the 2 different apps that link in with Xero to manage your cash flow. But we've got 5 easy wins, we call them, on the slide there to help you understand how to manage your cash flow. Now, the first point on there is the credit control system. Now, immediately, when we speak to clients about credit control systems, they always turn around and say to us, oh, I can't afford to have someone in-house to specifically work on credit control. And that's not necessarily what we mean. Yes, that's a scenario that you can have where you have an individual working on credit control and chasing those late payers and those unpaid invoices down. However, what you can do is a lot more yourself or a lot more in your business. So, for example, you could spend maybe 1 or 2 hours a week where you set aside that time to specifically chase down your slow payers. And if you specifically set aside that time to do it, you're more than likely to get it done rather than do it on an ad hoc basis. Or what you can do is get one of your staff to take on the role in addition to what they currently do in terms of credit control. So every week they can spend a couple of hours rather than yourself to actually chase your unpaid invoices. But at the same time, what's important to, not necessarily just from an action point of view, is to understand your customer payment cycle. So if you know you've got some particular late payers or some particular slow payers, essentially, what you should do is try and understand what the reason is for that with your particular customers or your clients and actually chase them on a more regular basis. And sometimes when you are sending them emails, put some deadline dates on there. There's a lot more that you can possibly do to ensure that you maintain a strong credit control system. So it's not necessarily just having the extreme of having someone in-house to chase the unpaid invoices. There's easy wins that you can do as a business to ensure that you have a more robust credit control system.
And just to add to that point about learning the customer payment cycles, it may be that your customer does the supplier run on the 21st of the month. So if you send them an email on the 17th or the 18th of the month to say, here are all the invoices that are outstanding, we hope it's included in our next payment, in your next payment run, this will ensure it goes on their payment run and you're paid promptly. If you've not done that and they miss your invoice, it's going to be another month before your invoice is paid. Again, that can add stress to your business in terms of cash flow. So it's not a major thing, but it's a little thing that can help with the cash flow. Now, the second point on there is about electronic payment. And before we talk about electronic payment, we need to talk about electronic invoices. How do you send out your invoices at the moment? Do you email them to the client? I mean, in the old days, people used to say, oh, I haven't received your invoice, so I can't pay you. Now, there's no excuse like that anymore because we email the invoices. So, and then when we talk about payment, how easy is it for your clients to pay you? Is it on the invoice, your bank details? Is there somewhere they can click onto on the invoice or on the footer of the email where it will take them to the next tab and they can put in their card details to pay you? Or do they have to go into their mobile banking app, find your account details and pay you? The easier it is for customers to pay you, the quicker you are to be paid. So it's really important from the outset of your business, you're thinking about how am I going to invoice my customers and how are they going to pay? What's the easiest way for them to pay? And have that set up from the outset.
And what's important in electronic payments is still surprising to us when we see a lot of clients requesting payments by checks or receiving payments by checks. And this for me is really slowing down your working capital cycle, because essentially the client will write you a check, send that in the post, which is a delay. You'll then receive the check and have to find some time to go to the bank and physically cash that check in, and it'll take a couple of days for that check to clear. Sometimes that process can be 1 or 2 weeks before you can actually receive the cash into your business. So like Jebtha says, is you've got to make it easier for your clients to actually make those payments quicker. The next point we've got on there is invoice financing. Now, invoice financing is a great way of drawing down cash immediately, especially if you've got some late payers in your business. And we see a lot of our clients actually use invoice financing. The only drawback with invoice financing is that you're not necessarily going to receive 100% of the funds that you essentially have made that sale for, because the invoice financing company will take their fee and their cut for that. However, what's good is if you're a business that has a number of clients that are very slow paying, but they eventually do pay. So, for example, you have some large corporate clients and they really withhold payment, but eventually they will make that payment. What's great is that invoice financing can really help your working capital cycle. It can really help by getting the money into you immediately and helping you focus in growing your business. Because essentially what you're going to be doing is, if you don't necessarily use invoice financing, you're going to be constantly wasting time and spending time chasing those slow payers, those late payers, and that time can be better used to focus on growing your business. So it's important to understand where you can use external services, something like invoice financing, to really help with your working capital cycle.
And in my experience, what I've found works for invoice financing is, like Mehul said, when it's a large corporate that you're dealing with, when it is a large corporate, for them to make payment is very difficult. It's on their terms. And if you're a small business, it's difficult to fight with that. So really something for a small business to think about. If my customer base is all corporates, major businesses that are very slow payers, is invoice financing better for me so that I can improve my cash flow? Now, the next point is leasing an asset instead of buying it outright. I remember speaking to one business owner where he just bought a piece of machinery or leased a piece of machinery, and he told me, I'm going to pay for this machine for 3 years. And in that 3 years, I would have generated extra income from this machinery to pay for it itself. So having the ability to lease the machinery is important, and it can add to your business. Have an asset that you don't have to own outright and generate extra income from that. Is that something you can do? If you're a small business, a cafe, for example, can you do with an extra coffee machine to improve the quality of your coffee, to speed up the queues and improve the quality of the service? So is that something you can think about? Is there any other machinery that you can bring in to improve the quality of your business? So something for you to think about in your business. What can I lease? Is there anything I can lease from the market to improve my business?
And moving on to the next point is business credit cards. Now, we touched about the use of credit cards and overdrafts and loans in the previous slide with regards to personal loans. Now, what I think is important is to strike that fine balance between your, I suppose, debt financing. So using business credit cards or interest-free overdrafts as an example, as a buffer, is fantastic because it gives you that little extra breathing space to ensure that, you know, just in case you don't have some customers who pay on time and you've got to make some supply payments, it just gives you that bit of breathing space to ensure that you've got a good cash flow management maintained within the business. So look at various business credit cards, those that are interest-free, and look at interest-free overdrafts. Speak to the bank and try and see what type of interest-free overdraft you can get to the maximum limit to help you finance your business, essentially. So it's important to understand sometimes these can have hidden costs, like we talked about in the previous slide, but sometimes they can also add great value to the business. So striking that fine balance is important.
And the other important of business credit cards is that it captures the transactions in the business. When it's paid through the personal credit card or the personal bank account, it's difficult for us to capture that when we're preparing the account. So you either need to make a list in an Excel or on paper to say, these are all the expenses I've paid out through my personal credit card or my personal bank account for the business, because that will ensure that we capture the transaction and also reduce your tax bill, because if it's not captured, you're going to be paying tax on profits that you don't actually have.
Now, moving on from that, so we've been through 2 bits here today. So why is it important to have a good cash flow and how to manage your cash flow? Moving on to the next slide, what we want to talk about now is 2 different apps. Now, these 2 different apps link with Xero, and they also link well together. And what we want to do is use these two different apps to show you ways in which you can use cloud technology to improve your cash flow. I'm just going to pass over to Jebtha, who's going to speak about Chaser.
So Chaser is fundamentally an automated credit control system. It's a cloud-based credit control software that it's an add-on for Xero and works well with Xero. And it chases your customers for payment on a regular basis. You can set this up from the start to say you want your invoices paid in 14 days or 21 days, and Chaser will automatically chase them after 14 days or 21 days. It's clever in that it will also, before it chases your customer, to save you the embarrassment, it will link with your accounting software, check if this particular invoice is being paid. If it's been paid, obviously it won't chase, but if it hasn't been paid, it will then send out a standard chaser to your client. And the aim of the chaser is to make it as human as possible and reduce the other side thinking that it's an automated message. So you can change the wording on the template to how you would send an email so that it sounds like it's coming from you. So that's something that can work. And the other aspect of Chaser is that if you had one customer where there was 10 invoices outstanding, rather than sending 10 different emails chasing for payment, it will group the 10 invoices for that one customer and send one email saying, these are all your invoices outstanding, can you please pay? So, and according to research, it saved customers time in terms of credit control, chasing invoices, so that you're focused on doing what you're good at in terms of servicing your clients and providing an excellent service to your customers. So something that can work for you potentially. We have a demo video that we'd like to show you.
Are you sick of your invoices not being paid on time? Is your cash flow starved? Or is effectively managing your debtor simply costing your business too much time? How does a 16-day debtor day reduction sound? And a time saving of over 7 hours per week on your accounts receivable? That's what our average customer sees. Allow me to introduce Chaser, the market-leading cloud credit control software. Chaser helps you get your invoices paid on time in less time. Born out of qualified accountant and finance director experience, Chaser enables effective and efficient credit control by automating the email chasing of invoices. Here at Chaser, we see that almost 80% of invoices can be successfully collected through email chasing alone. By automating this in a human-like manner, Chaser enables you to minimize the resource cost of your current credit control function. This enables you to focus your resource on those 20% of invoices that require human intervention, such as a telephone call, to maximize the results. Let's explore the product. After signing up and connecting Chaser to your accounting system in just minutes, you're ready to begin customizing it for your business. Our first protocol is templates. These are the basis of all automated email chasing that Chaser performs. Included are our own best practice templates, optimized to make the biggest impact in getting your invoices paid on time. You may customize these to suit your own writing style, ensuring your customer engages with your automated email chasers as strongly as they would with a hand-typed email. You may also add additional templates to cover any chasing situation you require, such as a more urgent tone for a late overdue invoice, or tailoring your wording to different types of customers. Templates themselves are made up of two elements: repeatable prose and placeholders. The repeatable prose is any static wording in the template, which will always be included as is in chasers sent out using this template. An example of this is a sentence like, "I just wanted to drop you a quick note." Placeholders, on the other hand, are smart tags for customer or invoice-specific information to be automatically populated. Examples include a customer's name or an invoice due date. For every template, you have the option of included copy invoices or customer statements as attachments to the email chaser. We always recommend including a copy invoice as an attachment to avoid that all too common 3 to 4 days, a week goes by, before the customer replies to say, "I need a copy invoice in order to make payment." While templates allow you to control what Chaser sends, schedules allow you to control who it's sent to and when it's sent. Schedules allow you to specify, with respect to the invoice due date, when you would like to send email chasers to your customers. For each of these chase points, you select which template you would like to be used for the chaser, as well as normal escalated senders and recipients. Escalation is a feature of Chaser that allows you to automatically escalate the sender and/or recipient of an email chaser for an unpaid invoice. This can be a very effective tactic in getting those difficult to collect invoices paid. Whether you want to run a good cop, bad cop routine, get more senior employees involved, or perhaps leverage the authority of an external accountant or bookkeeper on your behalf, Chaser's escalation feature allows you to set this up to take place automatically within a schedule. When you finish setting up your schedules and eventually begin chasing, they will run automatically, sending email chasers using your specified templates at the frequency you have dictated. Chasers will automatically stop being sent for an invoice when the end of the schedule is reached, or when the relevant invoice is reconciled as fully paid in your accounting system. This ensures you never chase a customer for an invoice they've already paid. Chase feed. Similar to a news feed you'd see in your social media account, ChaseFeed provides an overview of your chasing activity. Whether you're a finance director or a credit controller, ChaseFeed gives you the best insight into your credit control function for the limited time you have to invest in it. The upcoming Chase module in the top left displays a summary of Chase's next actions, keeping you in the know and letting you identify unchaseable invoices and rectify in time. The last scheduled Chase module in the bottom left displays a summary of Chase's last actions, letting you optimize the health of your chasing by helping identify difficult to collect cases before they become problematic. The Recent Events module on the right provides a rapid overview of your credit control function, displaying a reverse chronological timeline of events in Chaser. This enables you to quickly and easily identify areas of your credit control function where human intervention may be needed. Now you're ready to get started with Chaser. When you first create your account, Chaser will be paused by default. This allows you to explore the settings we've just gone through and customize Chaser to best suit your business. No automatic chasing will begin until you are ready and enable chasing by clicking Resume. If you ever need to, Chaser can be entirely paused again. This is especially useful if you're away from the office on holiday and won't be maintaining your credit control function. You can schedule Chaser to resume again automatically, or you can manually resume again whenever you like.
That's a brief overview of what Chaser can do. I hope you found that useful. Now I'm going to hand over to Mehul to talk about fidelity payment.
Yeah, so now you know a bit more about Chaser. What we're going to do is just quickly talk about fidelity payment. So essentially, fidelity payment is another app that adds on to Xero and really works well with Chaser. But what fidelity payment is, it's a virtual terminal to essentially collect payments from your customers. Now, based on my own experience, when I've given a bill to pay, so a perfect example was recently when I had to pay my council tax bill. My council emailed me over the bill, and on the email, it had a link for me to go and make an electronic payment. And the process was very easy, and it literally took me less than 2 minutes to make a payment to the council for my council tax bill. And I thought that process was absolutely fantastic because it made my life as a customer so much more easier to make that payment. I didn't necessarily have to go to a bank. I didn't have to go into my online banking. I didn't have to set up pay in my online banking and make the payment. It was very, very straightforward and simple. And essentially, fidelity payment does just that. What it does is you can send an email with an invoice, or you can send an invoice to a client and have on the invoice or on the email a link for an electronic payment system. So the client on their end can then just click on the link and make a fast payment to ensure that their invoice is paid on time. And from my point of view, personally, what I think is it makes your client's life so much more easier to make that payment. And essentially, they're more likely to then get that paid quicker because everyone is very busy. Everyone is very time short, essentially. And whatever you can do to make it quick for the clients to pay will be beneficial for you at the end of the day. So what are the key benefits of fidelity payment? Well, firstly, you can get paid quicker by adding the Pay Now button onto your emails. So you can have a big red button at the bottom of the emails or on an electronic invoice to say Pay Now, which takes them into another page to make sure they can get that payment made. What it also does is it automatically reconciles all the payments basically after the customer pays. So that's the added benefit. So there's no going back and reconciling payments to bills. But what I love about fidelity payment is that it also has the opportunity and the feature to take over the phone payments. So sometimes you're going to have some clients and some customers that don't necessarily want to do the electronic payment, that want to actually call up and speak to someone. And using the back end of their system, what you can do is take those over the phone payments and get that process pretty quickly. And at the end of the day, what I feel the key advantage of using fidelity payment is that it can link with your accounting software if it is Xero, but then also with Chaser. So you use Chaser to actually chase down your invoices, and you're using Fidelity Payment to make it easier for your customers to then pay those invoices. So it all really integrates well together. And like we've mentioned as part of this webinar, whatever you can do to make your client's life a lot more easier to make that payment to you will improve your working capital cycle and improve your cash flow management. And that's the most important thing for any business as you're growing, and even for many mature businesses out there.
And just to add to that, these are just two add-ons that we've looked into for Xero. There are loads of other add-ons for Xero that may be applicable for your business. If you'd like us, if you want to know more about the other add-ons for Xero that will be beneficial for your business, please do drop us an email or connect with us on LinkedIn. We're both on LinkedIn, and we'll be more than happy to respond to you.
Perfect. So now you guys have understood a lot more about cash flow management. We want to take some questions from yourselves that you might have had as part of the webinar. And what we'll do is we've got a few questions in already. So I'm just going to look at some of these questions that we have at the moment, and then we'll take it from there. So the first question we've got is about Chaser templates.
Yeah. Can you adjust the template? That's a question. And as mentioned before, Chaser includes 8 templates for the minimum on the lowest monthly plan. And this option to edit an existing template does exist. So you can use that to edit the text in the body of the email and send an email that's worded in a way that you'd like it to be worded.
The next question we've got here is actually with regards to Fidelity Pay. So essentially what they're asking is, if you're using a different cloud accounting software like Sage and not Xero, can you still use Fidelity Pay? Well, as mentioned, Fidelity Pay integrates best with Xero, but using a different software system shouldn't be an issue. At the end of the day, it can easily transit to Sage or QuickBooks, and it can work quite seamlessly. So I don't think that's quite an issue. So if you are on a different cloud accounting package, I'm pretty sure Fidelity Payment can actually link up with that.
And I've got another question here from Lauren asking if there's a trial period with Chaser. Yes, there is a trial period, and you can try this out. And the Chaser will hold your account details for 90 days from the moment you start your trial, and you can then try it and then decide what you want to do with it going forward.
A very good question I've actually got here is that, is Fidelity Payment a good substitute to use in place of PayPal and Stripe? So we know a lot of our clients currently use PayPal and Stripe, and essentially, yes, it is a very good replacement and it is very reliable. Again, it really depends on your type of business and what you want to use. If you're selling a lot of products, sometimes I see a lot of our clients who are selling lots of products rather than services using PayPal or Stripe. But essentially, Fidelity Payment can be used essentially in place of PayPal or Stripe. So at the end of the day, it's all about the feel of the app and what you prefer, but it can be used in place of that. I think that's pretty much it in terms of questions. We don't have any more questions to deal with at the moment, but like Jebtha mentioned, if there is any more questions that you have after the webinar, please feel free to contact us after. We're on LinkedIn. You can then find us on there, and we'll be happy to answer any questions that you may have.
Thank you for joining us.